you need to work smart and invest in a good assets, not only to have a few extra doors, but to have a real good assets that they can last as more than the crappy one next to it, and that will be more beneficial for you at a few years, 2, 3, or 50 years from now. And really work smart, and don't concentrate on a number of doors, but actually what you have in these doors.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate experts from every corner of the United States. We teach you how to harness the power of real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 180 of the Creating Wealth Podcast. Today, we get the great pleasure of chatting with Todor lalamov. Todor is a very seasoned multifamily investor, as well as a team lead for the Ad Vision by Candor Realty team. Todor, what the heck's going on, man? How we doing? Super excited to have you on here.
Yeah, thanks for having me, Kyle. Everything is good. Yeah, living the dream in the real estate world, and I'm saying it in a serious fashion.
I love it, man. I do absolutely love it. Yeah, so to kind of jump right in, man, we'd love to hear a bit about your story, kind of how things have come to be, like maybe jumping into the real estate space. I usually leave it up to guests, wherever you want to jump in is super cool, so the floor is yours, my man.
Yeah, so I'll tell a bit about my background. I'm originally from Bulgaria. That's in Eastern Europe. I moved to this great country of America back in 1997. I've always wanted to do business, and that was one of the biggest reasons that I stayed. I wanted to make money, and I don't think it's a shame in that, as long as you're doing it in an honest fashion. Started investing. My first property I bought back in 2006. It was a condo in Chelsea in the waterfront area. I house hacked. I had a roommate who was helping with the mortgage, and pretty much was coming out of pocket every month, very little. So that showed me the power of the real estate. At the same time, actually, I started my first business, which was restaurant delivery service company, a lot like Grubhub is right now, and Uber Eats. We actually started at the same time as Grubhub. Initially, they were only working with restaurants who didn't have own drivers, so they were platform for online ordering, so just Chinese restaurants, pizza shops, and we were the other way. We were the opposite way. We were working with restaurants who didn't have drivers, a little more upscale restaurants, and we're providing the service for that. We very quickly built this into a pretty large company. We had 75 employees. We're doing tremendous business. But then Grubhub changed routes, and they decided they wanted to be in the sector of also having drivers. They bought our biggest competitor, so there wasn't much room for us. And back in 2013, I believe, I sold my shares, so to a discount, but I knew that this business was extremely hard to compete, especially with Uber Eats and all the technology that was coming into the market. When we first started, we were faxing the orders to the restaurant. So
Wow.
we were faxing them, and they were calling to confirm they received it and send drivers. They pick it up and deliver it. But and I always wanted to invest in the real estate, to continue investing and buy some small multifamily with the proceeds from the sale of my company. Wanted to buy a few small multifamily buildings in Chelsea, where I used to live. I had the money to put for a down payment. I had the perfect credit score. but I did not. Once I started calling the banks, they said, "Well, you don't have income." Although for the next few years, I had a set payment plan for my part of the proceeds from the sale, but then I said that's not income, so I couldn't buy anything. I took a year off. And then I bought another business, existing business that was a vending and micro markets business, just so I have income, so I can buy real estate. It took me a while, took me a few years to get this income to a point where the banks who accept it. I didn't know back then the power of the commercial investing in commercial properties. So for me, it was just buying a 3 or 4 family. And at this point, this is 2016, 17. The properties in Chelsea went up significantly. I couldn't make a lot of, couldn't make enough cash flow. So the first properties that we bought were in South Lawrence and Methuen area, and then slowly transitioned to. When everybody started investing in this to follow the wave, we transitioned to Western Mass, Leominster, Fitchburg area. Invested a few in both some in Lowell first, and then moved to Leominster, Fitchburg area. And to the day, my 2 favorite areas to invest are Lowell and Fitchburg. I really like this, the big towns with obviously. We're having schools, universities, plenty of hospitals. The rental demand is great. I like these areas still to invest. So
Absolutely.
Yeah, that's pretty much how I started. And I think so. We bought like 4 or 5 smaller multifamily up to 4 units, and then in 2020, the prices had gone up significantly. We also made some improvements, brought the rental to the market value, the rents to market value, and we started selling this one by one and doing 1031 exchange into larger properties like 6, 8 units. We bought 18 units in Fitchburg, and this pretty much without any out-of-pocket expenses, all proceeds from the sales, and then we kept on doing it. So I think it's boring. Build it this way. That strategy is called stacking, but I think it's very easy. It's very conservative, but it's a great way to increase your portfolio and in a safe manner. So yeah, that's pretty much how we increased our portfolio. And right now these days, for the last few years, we're doing a lot of BRRRR deals. And for those who don't know, that's the buy, rehab, rent, refinance, repeat strategy. Pretty much you buy distressed property, you fix it, you rent it, you bring the rents up to market value, and then you do a cash out refinance, and hopefully you pay all the money that you initially invested. But even 70-80%, it's still, I would consider it as a good deal. It's a little tiring, to be honest. It's a great way to build up, but it's a lot of work as well. So yeah, I started slowing down on that part a little bit. I think we're around 100 units right now, so we're stabilizing most of it. And these are all buildings that we like throughout the year. So everything that we like we keep, and then everything we don't like we sell and exchange it to something better and bigger, hopefully. So yeah, I've done it all in the real estate. We wholesale a few deals a year. I love the wholesale business. As as a complement to the rest of the business. I mean, if you do it full time, obviously it has its challenges, and I'm not sure how rewarding it would be. But here and there, a deal comes in my lap, and if I can wholesale it, it's probably the easiest money that I've ever made in real estate. So I love it. We do a few flips a year. Actually, the last couple of years we do a few more. Again, very conservatively, and I enjoy my family as much as I can. My daughter will be a teenager next year, and I can also already see how is they've grown up, and my son will be 11. So right now I've always spent a lot of time with them, but now that I see how fast they grow, I try to spend even more time. I go to almost every soccer practice, and I never miss a game on the weekends with them. So yeah, I remember one time a couple of years ago, my son had a soccer game. I believe there was in some type of a tournament. It wasn't super important because it was the first game, so there'll be a couple more in that. But instead of going to the game, I went to view a property, and to the day, I feel that that's one of my biggest regrets. I mean, as I was driving there, I said, "What the hell am I doing, man?" I mean, there's properties. Every week something comes up. You can always buy stuff, but there's just a few number of games, and I regretted this a great deal, and I've never missed any of my kids' games to go do view a property, unless if it's for a client and he really wants to see it, he really wants to get my expertise opinion. I'll do that. But for myself to go see a property, no, I wouldn't do it. Not in the next few years. So that's pretty much what I do these days, and I love it. I love real estate. I've done a lot of with my delivery service company. As I said, we were doing tremendous business. I think back in 2011 was our highest revenue year. I think we did like $7 million in sales, and that's probably 15 today. And it was so hard. I mean, it just to do this business, it just was so. Like I said, we had 70 employees. Just to the logistics to do this it's unbelievably hard. Compared to if you do $50 million business in real estate, and I think the margins are similar if you're a flipper or wholesaler or whatever. Obviously, the agent business is a little less, but if you're a flipper, the margins are the same. I think I can flip $50 million today much, much, much easier than do a $15 million in deliveries, or even after that in my vending and micro market business. I was a restaurant manager for many years before I started my first business. It's like, I know people, real estate is hard, and I agree with this, but compared to other businesses, I think it's pretty easy.
I love that, man. There's so many things that I want to jump in there, man. I mean, one of the first things, like, just because we were talking about it a minute ago, do you think that like the kids have interest in like the entrepreneurship kind of stuff and kind of following in dad's footsteps, or still kind of figuring things
absolutely.
out?
I think my daughter would make a great. She'll make a great salesman. So I really hope that when she graduates from high school, I mean, if she wants to go to college, that's great. But I think if the landscape of the real estate business remains the same, I think she will be a great agent. She'll be so good at it, and I can easily teach her how to make more money than whatever career she gets out of college. So I really hope that they at least they want to give it a crack and go into that line of business.
Yeah, man. That's super cool. Wow. Yeah, no, I absolutely love that, Todor. I do. And one of the things that was in, like, I was thinking about as you were talking, especially early on in the beginning, man, and in kind of like those beginning stages of everything, is like, starting off in an industry that was completely outside of real estate, starting off, with your own business and that kind of thing, being forced to pivot from, the economy and the landscape in that space, that in the food delivery space, shifting, and then, having to like really pivot and go crazy in kind of like a different, a little bit, a little bit of a different space. That's wild, man.
Yeah, for me, Kyle, I mean, and this is why I came. Like I said, I stayed here, far from my parents and my sister, because I wanted to do business. That was, and
Yeah.
it didn't matter what kind of business. I mean, I wanted to have a restaurant. That was my first. First idea. But any type of business that makes money, and it didn't matter. I mean, I think it's getting harder now, but still. I truly believe that's the country to be if you want to make money, and obviously compared to my country in particular, and the reason I got into real estate is because I've always trying to find the business that I can make as much money as possible with the least amount of time and the least amount of stress, and I think that real estate. I mean, it's not a stressful business, or is that easy. I don't want our audience to think that that's super easy. It's not. I'm just comparing to other businesses that I've been involved with, and real estate met all these criteria. I mean, it's flexible time. One of the things that I like the most is that if today I decide, wow, I really need money, I really want to make more money in the next 6 months or a year, you can really step on the accelerator, and I can make more money through pick up more flips, raise more money, do more sales with my agent business, in pick up more wholesale dealers, really be aggressive in marketing and everything, and you can do that. You can succeed, and if vice versa, if I feel that, wow, I'm really busy right now, that's taken away from my family, from the other things that I want to do, you can step off the gas a little bit, and then whenever you want to go back head first to it, you can. With most of the other businesses, you can't really do that. I mean, if you own a restaurant, you can't really say, oh wow, you know what, I'm just gonna relax a little more for the next couple months. It doesn't work that way. And that's another thing that I really love about real estate: the flexibility of time, of how far you want to go, how much you want to push. And I really enjoy it and like it.
Yeah, no, I think it makes a ton of sense, man. And I think that's a tremendous variable, is like being able to kind of regulate where you're at, especially, with having other parts of your life as well that are incredibly important to you. And kind of like being able to balance out, how like heavy things are going, how light things are going, like how much money's coming in, and just be able to kind of gauge in a sense where you're at, and, be able to pivot in slightly different directions within the same industry, depending on, if you're looking to do more, looking to do less. I think that's a huge point.
Yeah, 100%. And like I said, the most important is spending time with my kids. And to go back to your question about my kids, and if they want to go into that same business, I take them a lot with me. And when they're not at school, and they're curious, so I explain to them how does it work with the rental properties, how you collect money, what do you pay for mortgage, all the stuff. So they really like it, and they start to understand it. My son, I think he understands it, and he's not even 11. He understands how it works. They always ask me a lot of questions, and they're curious about it. And I think it's a great line of business. I don't have college funds. We just designate a couple of small buildings for each one of them. And if they want to go to college and we have to pay for it, we can sell that and pay for the college. If they don't want to, which I kind of hope so. I hope to. Again, unless they want to be doctors or anything that requires education, then I'll be 100% supporting. But if they just want to go put any major, just so they can play beer pong and get wasted, yeah, I'd rather much get them and show them how they can make money and these buildings, the two buildings for each one of them, if they decide not to go to college, this will be their first business. Make it so they can sell it for maybe until they get to be 28 or 30 years old. But they can use the rental income and manage it. And if they don't like it, I'll get it back. And when they get 30, then get to age of 30, they can sell it.
Yeah.
So yeah, I really enjoy teaching them this and just lead by example, not only in business but as human beings. There was this Bulgarian actress who I heard like a long time ago. She said the parents try too much to bring their kids up and educate them and all this stuff, raise them the proper way, and then that's not a mistake, but we should, as parents, we should educate ourselves how to be, good people and polite and have good manners and be appreciative and all this good stuff that we're trying to teach them. We should teach ourselves, and the kids just feed off it. So if you show them that all this, they'll feed off it. But if you're not and try to teach them, then it's not going to happen.
Yeah.
Same with all of our family. We're very big into sports, and I still exercise six times a week, and I play soccer and a lot of all kinds of sports activities. And when kids see that, they want to be into sports. My son is completely obsessed with soccer, and my daughter as well. And I think there's a lot of kids that the parents are not athletes and they still do very well. But I think if you're expecting your kids to be to thrive in sports or anything, you need to lead by example and also be fit and do sports with them. And I love playing with them.
I love that, man. I love that principle in itself. Guys, you definitely want to go back and listen to that one more time just to make sure that you got that, especially if you have, children now or having children soon or what have you. Yeah, man, like just that overall like osmosis of, what are mom and dad doing? What are, the kids seeing from like a business, perspective, from a career perspective, from a activity, fitness, like the other parts of your life. And I guess, kind of some of those both direct and indirect principles that they just absorb, as like from proximity, and just some of the things that they pick up. And
absolutely, they absorb everything. And in Bulgaria, still, a lot of people smoke. Still, it's slowing down a little bit, but most of the people smoke cigarettes, and then they expect their kids not to smoke. It's you're smoking, and then you teach their kids not to, and then they'll be get them in trouble if you see them they smoke. So it's kind of doesn't really work this way.
Yeah.
So I gotta lead by example, and they, like you said, they absorb everything.
I love that, man. Dude, I wanted to commend you too. I think it's the coolest thing in the world that I guess kind of the plan for them and having like a couple buildings, per kid, and those properties being able to, when the time comes, for them and that kind of thing, to be able to figure out what they want to do, if they want to continue, with it as is, self-manage, start to grow a portfolio off of that, the whole shebang. Or if they wanted to go in a different direction and end up selling that thing, refinancing it, what have you, to be able to fund another endeavor, another career path, I guess, growing up and that kind of thing. I think that's the coolest flipping thing in the world, man. And it's
Yeah, absolutely. And if they want to be in business, but not the real estate business, and if they give me a business plan that I approve of, that I think that can work, they convince me to be an investor. Yeah, they'll probably be able to I'll sell one of their buildings, and they can invest this money into that business. But yeah, they need to pitch it to me, and I need to really believe that they can do it. And just like any other investor, you go and nobody will give you money if you don't prove them. Then they can actually do it. So yeah, we teach them. Me and my wife always we have nice things, and we like to live a decent life, to afford things, and obviously we don't want to hide the everything that we buy in real estate. What's the value of it? What is it? I can't tell them. I like them to know, but we also make it clear every single time that these are our properties, not theirs. This is everything that we have is ours. They have absolutely nothing to do with it until they prove that they can be responsible adults and they can manage it. And then maybe things will change.
Yeah, man, continue the legacy.
But until that, well, I mean, it's I don't know what kind of legacy is, but everything we did was with hard work. I came. I have $30 when I came. I had $30. I came on Friday. Arrived in New York on Thursday. Got to Boston on Friday and started working on Sunday. And I never stopped. Just with that year that I took off after I sold my business. But in that year, I was just researching other businesses. I was just doing a lot of stuff. But I never stopped working. And I believe this is the only way. The only way you can succeed is if you just keep on grinding, keep on working. And it was very hard for me. The life was very hard. I didn't have. I came legally, but it took me a while to get a green card, and I was stressed out all the time. And the more stressed out I was, the more I worked. Every time when I had any type of life adversity and any type of trouble, not trouble, but hard times, I just went back and I worked more. So I think that's work cures everything. I mean, just put your head down and work as much as you can.
Yeah, that's incredibly admirable, man. From just like that whole entire story, from the very, very beginning, when you first came over and that kind of thing, and built your way up, as the years have gone on. And it's incredibly inspiring, man. And guys, it's entrepreneurship mixed with real estate is a pretty deadly combination when executed properly. So it's definitely something that can change a lot, for you and your family. And to Todor's point, with a hell of a lot of work. It's definitely not easy, but
Yeah, absolutely. But at least when you work here, you're rewarded, because when we live in Bulgaria, it doesn't matter. You can work a lot, but you're not going to get ahead. The pace was low. So right now things are different. If you're smart and you have good work ethics, you can succeed there. But back then in the 90s it would be very, very hard, really, really hard. So and a lot of times that's what we, Kyle, we do a lot of, we have our meetups, simplified meetups. And one of the reasons that we do it is to teach people and get them inspired. And I spoke to a bunch of them, and I've always said, hey, listen, it's easy. It's much easier here. You think that it's hard, but it's easier than probably 85-90% of the other parts of the world. I mean, you in America, it's easier than most of the places in the world. So, I say the same thing to a lot of fellow Americans that talk bad about how tough life is, and how bad this is, and how bad that is, and how there's not enough opportunity, and because you're this or because you're that, you're discriminated, or any type of excuse. I always say, well, you should go travel, man. You just go to Eastern Europe, spend a couple weeks there, go to a lot of places in South America or Asia, see how, or Africa, see how people live, see how people do it, and maybe when you come back, you have a different perspective, and you say, oh, man, it's not that bad here. Let me I think maybe the only reason that I haven't succeeded is myself, and it's. We live in like I said, it's a great country, and people take a lot of things for granted. But we encourage them to travel abroad and go to a poor country, see how people live, and get some inspiration.
Yeah, man. I think that's a tremendous point, Todor, is like, it's that reference point, right? Like having the reference point from, or I guess like the reference point that everyone has on, certain things, and like, what I guess they're used to in the kind of culture that you're in. And it is incredibly fascinating because, I mean, to your point, man, like, I mean, I couldn't tell you the statistics off the top of my head by any means, but even like having like clean drinking water here, like I hear, there's a guy, Gary Vaynerchuk. I probably saw him on Facebook. He's like he's got like a bunch of companies and shit like that. And he came over from Belarus, many years ago, probably 30 years ago or something like that. But one of the things that he most often shares is like, millions of people across the world don't even have access to clean drinking water in like 24 hours. And it's like the things that we bitch about, for lack of a better term, many people here, because they don't have those reference points of how everybody else, I guess what the norm is, quote unquote, in other parts of the world and that kind of thing. It's fascinating in a very like interesting kind of way. And exactly, man, like, the only way to
100%, and that's why I think that most of the immigrants who come to America, they're successful, because they come from a place where they've seen what life is, and they've seen that it doesn't matter the effort, it will be very, very hard to get ahead of the
in general
crowd. In general, and you come here and you see that actually, it all it takes is hard work and have a plan and figure out what you want to do, and let's follow the steps. If you want to open a pizza shop, you go and work for 5-6 years in a pizza shop, learn you can open a pizza shop. Nothing stops you. In most of the countries, I don't think you can do it. At least it's not as easy as here.
Yeah, that's incredible, man. That's very, very interesting. Yeah.
I would recommend a book, and this comes back to the beginning of our conversation, that one of the books that really helped me not change perspective, but it's called The Life on Year, and it talks about that work is great. I have to once you get into a certain level, you can make it only about work. You need to have other things that need to find a balance between work and enjoying life. I know a lot of people that have a lot of money, and instead of making more, that their families are struggling. They don't enjoy their kids as much. They don't travel nearly as much as they can afford. And they say, well, I'm working towards retiring, so once I retire, I can do all this stuff. I'm going to retire at 50 or 55, ahead of everybody else, and then I'll do all this stuff, which is great. But if you can do it while getting there, might as well. I mean, if I probably have No, the last few years, the last couple of years, maybe not as much, but I manage to have couple of months, over a couple of months off of the year, and don't put that many hours during the week. Um, and I love this. I really do. And yeah, obviously I'm missing on a lot of opportunities. Yeah, if I worked let's say 60 hours instead of 30, and if I worked 12 months instead of 9 or 10, yeah, I can probably pick up a few more properties a year and do a few make a lot more. But then, what's the you miss on your nice part of your life. You miss on a lot of things just to make more, which uh, this book helped me to get out of this mindset, and it was a great help. I recommend it. It's a great book.
Yeah, no, I absolutely love that, man. I haven't read that one. I'll have to add that to my list. But yeah, I think that's a huge point. I mean, especially even like to your point, man, like just like during the journey as well. It's like I feel like a lot of times, everybody's so focused on like, oh, just put every single dollar you have, towards another property, or whatever it is, and like just getting stuck in this trap of like, just saving to just get to the next thing and just keep building as fast as you can and all that. But to your point, man, it's like, especially, like there should be some leisure, some pleasure, some enjoyment in there, and like going out to, travel around. And I feel like it's so easy to just get caught in that minutia of like, all right, like I'm, here's like $3,000 that just came in. Like that's just going towards another house. Like, don't even fucking worry about it. And
yeah, it gets addictive. That people are so obsessed with the number of units they own that it gets addictive. But to what you just said, I mean, yeah, I'm gonna work, and then I'm gonna when I get to 55, I'll do all these things that I've been dreaming of doing. But then, what if you don't make it to 55? I mean, there's nothing is promised. I mean, you don't know if you're gonna make it to this age, and then you lay down and you say, well, man, I just wasted my a lot of my time where I could have done this and that I always wanted to do, but so if you can afford it, if you get to a level that for me was, I wanted to have certain amount of income every year, and that was enough. And with real estate, the power of real estate is just by doing nothing, just by owning real estate, the price goes up and your net worth increases anyways. But the money for the everyday expense, yeah, I'm not. I do certain things. I don't go crazy. I like to go back to my country every year for a month and travel around and do as much traveling as possible. And when I go to a supermarket, I don't look at how much the chicken costs, and want to go out. In the restaurant, we me and my wife, we go out every week, at least once a week. We go on a date, and that doesn't take that much money. Certainly a lot less than people think. Yeah. But if you get obsessed just to make more and more and more, then you really forget. What the purpose of life is, which is to live it. Yeah. And you remember, Kyle, when we went to the Bigger Pockets Bigger Pockets conference in New Orleans.
Yep.
Remember, I don't, every time when we went to in the hotel, we're waiting on the coffee line or on the food line, and you start make a small talk with the person behind it. Every time the first question is, so how many doors you
it's like, come on, man.
And I understand, we are there for real estate, and that certainly is a metric that can validate how advanced you are in this world. But it's really weird, and I think a lot of people, a lot of investors say, oh man, I want to make want to have 100 doors or 200 doors or 300 doors, and then I'll be all set. Yeah, I don't know. Are you going to be all set? I mean, it's exactly. It's what I'm trying to get. I was trying to get to a point where you need to work smart and invest in a good assets, not only to have a few extra doors, but to have a real good assets that they can last as more than the crappy one next to it, and that will be more beneficial for you at a few years, 2, 3, or 50 years from now. It really works smart, and don't concentrate on a number of doors, but actually what you have in these doors. And I actually there was this guy that was very really weird. I remember I was talking to him on the food line, and he said, "Oh man, I have like $100 in Alabama. I'm crushing it. It's my second year, and blah, blah, blah." Not 100. I think he said 50 or something like this. And I'm like, well, I know a guy that has a triple decker in the Back Bay of Boston, and so he has 3 doors, but he has a lot more equity and makes a lot more money than your 50 units in Alabama. I would bet you anything.
Yeah.
And he said, all right. So yeah, don't. My one of advice they want to give to your audience is, don't, concentrate on the amount of equity you create every year, rather than the amount of the number of doors you add to your portfolio. Because you might might add 50 doors, but you have $200,000 equity in it, or you might buy have 6 invest in 6 doors this year, but have 500,000 equity. So which one would you prefer?
Exactly.
So yeah, the number of doors, I think it's just a metric to show that you know what you're doing in the business, but it's pretty crappy statistics, I think.
Absolutely. Yeah, I definitely agree with you, man. And I've heard around too, like it being described as like the quality of the door versus the quantity of the door. It's like, and I feel like it's when it comes to the quantity, like for a lot of people out there, like not to like talk shit, but like I feel like it's more of an ego statistic of like, oh yeah, I have like 75 or 340 or like whatever. And it's like, all right, like great, dude, you know what I mean? But it's like, exactly, man. It's like it brings you back to like, why the hell am I doing this in the first place? It's like, congrats, like that's cool, but like, like are you really, getting out of it like down to a, boiling it down to like a cause and a what's the word that I'm looking for? I don't know. I just like kind of like that level of the word slip on my mind, but I guess like the reason that you got into it to begin with, it's like, was it to say that you had 300 flipping doors, or was it to like, be able to, in a sense, liberate you and your family from like all the daily minutia that you hated for years and years before that? It's like, it's like, come on, man,
Well, the reason you get it is to make money, because we love it. I love this. I love real estate more than any other business that I've been. If I have to go back, I would do it. I wouldn't even think twice. It's the best business. But in the end of the day, you do it for money. You don't, you don't do it for fun, because it's not fun. I mean, it's even if you have we all have management companies, but it's you talk to the managers every day, and you know what's going on. And there's a lot of, and like you said before our conversation, you go through evictions, and even if you have an attorney doing them, he still calls you and he's still discussing. And he says, "Well, she's crying, and I don't know what do you want to do," and it still go through all this. So you're definitely not doing it for the fun.
No,
you do it for the money. And there's another great book that I would like to recommend. It's called the Tiny Almighty Investor, or something like this. I forgot. I read it a few years ago. So it pretty much talks about that it's better to have a few assets that are really, really producing, and that they will appreciate a lot in time, than having hundreds of doors that are crappy and they don't produce, and you own 20% of it or whatever. And so I think that the Small Almighty Investor, I think it was the title. It's a great book. So the quality, like you said, the quality is much more important than the quantity.
Yeah, I love that, man. It's awesome stuff. I love too, man. I wanted to ask you. So when it came to, I know you mentioned earlier, eventually, like you kind of get to a point like picking up, I guess like initially picking up like a smaller buildings, keeping, keeping the ones that you like, and then 1031ing the ones that don't serve you, to be able to buy, the 6s, the 10s, the 20s, the, and trading up in that sense. I guess, how do you kind of make that determination between, say it's between like, I don't know, like 2 6 families or something like that, on like, is it like, do you purely base it off of, I don't know, it's kind of a loaded question, but like a cash flow, like a management, like ease of...
You mean which one you want to sell first, which one you want to get rid of?
Yeah, like which one you want to hold on to, and like which one to 1031
yeah,
up
I
to,
mean, well, you know that very well. I mean, if you, with your properties, if I ask you which one you want to keep, and if you have to choose which one to sell or which one to keep, I'm sure you know the question. I mean, the answer is obviously there's some properties you like better than others. But I wish I had the slide. In our meetup in Marlboro, I believe, that the one that Chin and Sean started. I was talking to I was a guest speaker last month, and I was talking about the stacking that we just mentioned earlier, the stacking strategy, and I gave example with one building, one of our first buildings that we purchased in 2018 in South Lawrence. So it came on the market on Friday, and there was scheduled showings from 8 o'clock to I think 4 or 5 in the afternoon, and I was one of the first ones. I scheduled for like 8:30. I went in. I really liked it. It was for 405, I believe, the asking price. Typical triple decker, 3 bedrooms with opportunity to make it 4. Need some work. One of the units was very crappy. The other ones were decent. So the seller was the agent was also partial owner. So I like this building, and by 12, I went a couple times back and forth. I talked to her. I had my laptop in the car, so I put an offer, and for $415, I was able to get it under contract. So this building, we probably invested maybe $20,000-$30,000. It was much cheaper to fix stuff back then. And in 2020, sold it for $570.
Gotcha.
Now it's probably $800, so it's still, it's not. It was a good timing, but still the price is going up. So with the proceeds, we purchased 18 units in Fitchburg. This is my first purchase in Fitchburg. I knew about the market was coming up. I was checking out properties, and that actually John Bombacci had this deal. A lot of people passed on it. So I purchased this. It was I think 11 residential, 5 bay garages, and 2 barns, a couple other garages, just regular garages, and it was for $680. So without any out of pocket costs, we bought this building. This year we sold 3 of 5 the bay garages to John and Matt and Todd, to their management, to the management company, Simplified Management. They wanted to use it for equipment. I believe we sold it for $150,000. We put this $150,000 as a 50% partners win in a 7 units in Leominster. So we bought this again with out of pocket cost, and they had to release the deed, obviously, to separate this portion of the property. So we appraised it anyways. So then I said to our lender, hey, we owe $400,000. Let's say it appraised for 1.4, I think, and this is actually pretty low. I think on the open market you can sell it for more, but I appraised the thing for 1.4. Can you give us some money from this trapped equity without refinancing, because we still have 4% interest rate? So they gave us $300,000 out of this equity, obviously on a higher interest rate, not the same. With this $300,000, we used $225,000 to purchase the 8-unit, beautiful 8-unit building in Winchendon. Used to be a school, very nice, complete turnkey. So I think the down payment was $225,000, and then we used $75,000 for we invested in to do some repairs in other properties. So just out of this purchase in 2018 for $415,000 that I invested $100,000 was the down payment. We turned into We bought into like 27 units, I believe it was altogether, and we have close to $1 million in equity just by this one purchase. And this was our home run. I mean, not saying. I mean, we did the same thing with four or five other smaller buildings. With one, we bought nine units in Allenstown. With another one, we bought 6 units in South Lawrence again. We did a lot of exchanges. 7 units in Athol. This was definitely the home run, but still, with any of the purchases that we made in 2018, 17, 18, we multiply with probably at least 5-6x that amount of initial investment. And you can do it again. I mean, this now the plan for next year is to sell this a lot of these properties and exchange it to larger buildings. And yeah, it's boring, but it's safe, and and it's And we do a few flips also. I take a little different strategy with the flips. It's kind of a mix between BRRRR and a flip. We try to hold it for a year and a half and then sell it, so they can do 1031 exchange, so you can defer the capital gain tax if it's stable. Right now we're doing. We picked up 2 or 3 families in Fitchburg. Actually, we made fun of one of the buildings, so I hope to prove you wrong. It is a pretty crappy building, but
I've walked that one.
Yeah,
I walked that one.
Yeah, I know. But I think we can make a decent buck out of it. I'll let you know the outcome. So this one will definitely not going to hold for a year and a half. We'll try to sell it immediately. But the other one we just picked up also in Fitchburg. Yeah, it's a little more stable. So probably hold it for a year and a half and then sell it and do 1031 exchange.
Hell yeah, man! It's funny that you say that about that 3-family Todor, because like the story is me and the other person that sold you that one.
I mean, you can shout out to Ryan Corcoran. He's a great guy. I mean, he's I mean, there's no.
It's all good. But the story was with that one, man. It was hilarious. I sent a campaign, and Ryan must have did the same thing. A postcard, probably freaking a year ago, if not more than that, to this guy. And I randomly got a call to my Google Voice, and I was talking to him for a little bit, and went to see it like 2 days after that. And I was talking to the owners at that time, and we were just shooting the breeze back and forth, and I was asking has anybody else came to check this thing, check this property out or whatever. And the woman was like, there was this super crazy investor in like his 30s that said he had over 100 units and that kind of thing. And I was like, and it was ironic because we have a really small world around us, man. It's huge, but it's really freaking small.
Sneaky bastard.
Yeah, and it was ironic because I was texting Ryan. I was a little bit early to that appointment, so I was in like a park, one of the parking lots, just like waiting for a couple minutes, and I was texting Ryan about something else. And I texted him on my way home. I'm like, hey, dude, I'm like, by any chance, I'm like, did you walk a 3-family in Fitchburg today? On Myrtle Street? And he's like, yeah. And I called him up instantly, dude. I was like, no fucking shit. I'm like, you were like an hour before I was, checking that thing out. But yeah, it was just hilarious, man. It's a small world.
It's timing too, man. It's timing too.
Exactly.
So yeah.
But,
so yeah.
Hell yeah. But yeah, that's more or less what I was asking earlier, man, was like, how do you know when to like kind of trim the fat in a sense? Like, if you're, I know I hear like so many different perspectives of like, I've heard investors that are like, oh yeah, I'll hold a building for like 7 years and then dump it, like to not have to deal with like a lot of the major CapEx, kind of items and that kind of thing, depending on condition or whatever. But I've heard like, return on equity being used as a metric to know when to dump something to trade up. And it's for like somebody in my position, Todor, very early into the game, with 2 properties. My mentality now is absolutely, some equity, but I feel like cash flow is more important to me at the moment, for my goals and that kind of thing. But the thoughts have gone through my head of like, oh, well, if there was something that came up, like, do you sell like Lemonster that's got like 200 grand in trapped equity in it to then buy like a 6, something with like an NOI based valuation instead? Or, yeah, and like that's kind of the reason why I was asking, is like there's so many different ways to skin the cat, and like how do you like to, I guess, kind of
yeah, absolutely. I mean, it's hard at the beginning because you have that sentimental attachment to, especially your first properties, and it's hard to sell. I mean, it's very hard, even to the day when you get to sell something. I don't know, should I do it? A lot of investors, they say, I never sell anything. Everything that I buy, I hold, forever. I never. This is. But it's individual. I think you should. I really think when you feel that you're ready, you should do it. If you can exchange something. If you can exchange 3 units into 6 units, you should do it any day of the week. I mean, I think you should. But also, man, you're in the business for a while, and you've been in the business for a while. Follow your instinct, follow your gut feeling, and whatever feels right at the right time. The biggest advantage that you have is that you're so young, man. I mean, and you're doing already great stuff. So don't rush it. I mean, it's not a sprint. It's a marathon. So slow. Yeah, it's not a race. I mean, just compete with yourself, not with anybody else. Try to outwork yourself and perform yourself. But yeah, don't care about what other people do. Whatever you feel it's right. For me, I don't have like a strict strategy that I follow. It's pretty much whatever come around it. There's just so many things you can do. I mean, there's so many, but you have as much time of the day, and I was actually talking to a friend. He's also an investor, and he, we're talking again casual about what I do and how I do it, and because he wants to quit his W-2 job, and was asking some different questions, and at the end he said something that I really, really liked. He said, so pretty much you eat what you hunt, and I really like that expression, and that's what pretty much what we do. We eat what we hunt. So one of the reasons that I picked up this tree family that we mentioned is because at that point I didn't have anything to do. I just came back from took a month and a half off, more than that I think, and I didn't have anything going on. So yeah, I mean, will I make as much money that I would like to? Probably not, but I still make a decent money, and I can use this money for right this moment. If it was half a year ago when I was extremely busy with other stuff, I would probably just be like, I'll just go and take a look at it and walk away. But at different times you can do different things. So it's no right or wrong answers to most of the questions. Is what you feel like, and what will suit you best at that time of your day, of your year, of your month. So if you can concentrate on other things, if your agent business is super busy, just go ahead, man. Just crush it with your agent business, make money, buy another tree family. If it's slow, if you're slow and want to do something, try maybe think about selling this building and buying another one. So it's really no wrong or right answer.
That makes a ton of sense, man. And it's funny too. I think that's super valuable advice, especially for everybody else that's listening as well, man. Because it's like, how it is, man. Like, a lot of our friends and that kind of thing of different levels and experience in the game, like everybody has like a different voice, like different opinion and that kind of thing. It's like, this person tells me to sell everything and like put it into this and this, that, the other. This person keeps everything and like never does that and does it differently. Like everybody just has a drastically different opinion. And it's like you always have this minutia of like, different opinions, different thoughts, like try this out, try that out. It's like a freaking buffet out here, man, So that's super, super valuable advice.
And just keep in mind that we are fortunate that we have a lot of great people in our network, people that do tremendously well in the real estate. They do great stuff, and I admire them, and they know the business in and out. But it's good to get an advice, but at the end of the day, the advice that they give you, is it coming out of you? Do they put themselves into your shoes and think what's best for you at this point, or they're looking at what they would do? Because what they would do is maybe much different than that. That might not be the best thing that you should do. So yeah, by any meaning, discuss it with the more people we discuss it with, the better, obviously. But in the end of the day, whatever you know the business already, and most of the people they have done enough business to know what's right for them. At the end of the day, do what you think is right for you, or what your intuition tells you, and go with it.
Yeah,
I've taken advice. I've taken advice before by people that are not necessarily more experienced than me, but people that are more experienced in certain areas. And I've taken this advice, and I said, okay, well, maybe I should listen to this guy. And then I have regretted on a bunch of times, like, tremendously. Like there's a couple of buildings that I still look and say, man, why I wanted to buy this? Why I had to call this guy? Why I have to listen to him? I mean, the advice he gave me, I mean, it's not a bad advice, but it's mostly, what he would do, and not what was right for me. So at the end of the day, just enough that you can make a decision on your own.
That makes a ton of sense, man. Awesome stuff, Todor.
Yeah.
I know we can keep talking for hours, man, but thank you so much for coming on here, brother. This was a ton of fun.
Yeah, of course.
We're on
absolutely, man. Good luck.
Social media. Can you be found?
I'm not much, not big on social media, but pretty much my name on Facebook. I go on Facebook. I started Instagram page before I post. I don't know. I don't like. I don't like posting. I don't like that. I even actually people were helping me before they was paying, but I still and I should. I mean, I'm not. That's definitely something that I should do, but it's just never been my thing. I mean, I'm on social media, like my name, but you wouldn't find much content there that anything useful. I post some of my deals here and there, maybe just to remind people that I'm into this line of business, and if anybody needs any help or advice or anything, they can reach out. I never advertise myself. It's just things came naturally with me, and maybe that's part of the reason that I found success in this, especially in the agent business. I've never advertised myself, and never. People would just reach out, and again, we lead by example. We want to sell what we eat. I'm not selling you something that I've never done, and I think that's why we are successful in me, you, and everybody in our network, is because we are investors first. And I many, how many times I've showed buildings to clients, and they passed on it, and that I bought it at least 3-4 times. So, and more than that, I would say probably a dozen times. We're not trying to, because I don't like sales positions in general, but real estate it's much different, because that's what we do. Hey, I bought the building next door, and I'm not trying to sell this. I think it's a good deal, not because I want to make a commission out of it. I think I share in my opinion because I do think it's a good deal, and I think
exactly.
I do think it's a good building, and I do think it's a good area, or I think this is going to happen, or so I think that's why we find success without. Me personally, without a lot of advertising, but heads down to you, man. You're very vocal on social media, and I definitely think that's the proper way to go about it. Just not my thing.
I hear you, man. It's definitely a lot of work. I hear you, and it's exactly. I mean, it's kind of finding that that voice for everybody's being different. You know what I mean? It's like, yeah, I totally hear you, man.
Yeah. So for a good old fashioned. So for if anybody had a question, and any person that will hear this interview wanted to get in touch with me, have a question or anything they want to share, they can ask you for my phone number. You can give them my phone number. They can call me. A good old fashioned phone call.
Hell yeah.
Will be.
Sounds good, man. I'll definitely do that, guys. Definitely reach out to me. Link up with Todor. He's awesome.
Yeah,
and
100%. And I can usually go on the Lowell meetup every second Thursday. The simplified meetups we have in Lowell, and I'm always there. So yeah, if you guys want to come and say hi, I'll be there. And thanks a lot, Kyle, for having me. It was a lot of fun.
Absolutely, Todor. Thank you so much, my man.
Yeah, of course, anytime.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.